Hi everyone, welcome back to Saheb Academy. Today in this third video of depreciation chapter, we are going to solve this problem, and this is our second problem of straight line method. And the most important focus over here would be on the two accounting treatments that we have in this chapter. Okay, I've told you in the first conceptual video itself that in depreciation chapter we have so many methods, but we have only two ways in which we can do the accounting treatment. The first one is the basic accounting treatment, where we do not maintain provision for depreciation account, or you can also call it as accumulated depreciation account. Yeah, without doing that, how you will treat the depreciation, that's the basic method, which is not actually followed much in practical life. In practical life, this method is followed, this accounting treatment is followed, where you maintain something called as provision for depreciation account, or you can also call it as accumulated depreciation account. Okay, in different books, different terms you will find. Is that clear? Right, so we have to understand this properly. So that is why what we're going to do is we are going to take this question and solve this question from both the ways, from both the accounting treatment. The first one, when it is not maintained, yeah, provision for depreciation or accumulated depreciation account is not maintained, and the second one is when it is maintained. Is that clear? And here we are not just going to prepare the ledger accounts. No, we are going to get the complete picture. We are going to solve the journal entries, yeah, prepare the journal entries, ledger accounts, and as well as the balance sheet, yeah, extract from the balance sheet. Is that clear? So the complete picture you will get over here. So let's begin. Now see here, first let's just read the question. Rishi purchased a machinery for 10 lakh rupees, okay, on 1st October 2019. Okay, now here there is no installation cost or something, so this purchase cost will directly become the cost of the asset. Is that clear? Yes, and the date of purchase is 1st October 2019. So from this date, this machinery is available to use. So from here you have to start charging the depreciation from this date, 1st October 2019. Is that clear? Simple. Depreciation is charged at 10% per annum by straight line method. You see, the question has directly told you have to use the SLM method, and the question has given you the rate directly. So you don't need to apply the formula and calculate the depreciation. Directly use the rate on the original cost. Yeah, you know, right? In SLM method, we have two ways in which we can calculate depreciation. The first one is the formula, cost minus RV divided by useful life. You will get the depreciation. And the second way is using the rate. If rate is given to you in the question, then you can directly calculate what is the original cost into the rate. That's all you do, right? You know that if you have watched the previous video, yeah, the second video, then you would definitely know, right? And then accounts are closed every year on 31st March. Okay, that's the ending date. That's very important, because on 31st March at the end only we charge the depreciation, and the depreciation is charged for the complete 12 months. But sometime what can happen? Sometime there will be purchase of machinery, or you may have sold the asset, yeah, purchased the asset or sold the asset in between the year. At that time, in those years, what you have to do, you may have to charge the proportionate depreciation. Right here in this case, see here, you have purchased in between the year 1st October 2019. So when 31st March 2020 will come, then you will have to charge the depreciation on this machinery, but you cannot charge for the entire 12 months. No, because you had the asset only for 6 months, from 1st October till 31st March, isn't it? So only 6 month depreciation you will be able to charge, right? Don't worry, we'll see this in the solution. Okay, right, then see here, you are required to pass necessary journal entries, prepare balance sheet extract, okay, and also prepare the necessary ledger accounts for the year ended 31st March 2020, 2021 and 2022. So this question is asking you the data for how much? For 3 years. Okay, you have to prepare the journal entries, ledger account and balance sheet extract for all these 3 years, right? So let's just do that. First, we'll start off with the when provision for depreciation account is not maintained, the basic accounting treatment, and then we'll move on to the sophisticated one when it is maintained, right? Okay, so let's just go to the solution now. Now see here, we have the solution, and this is the first one, that is without maintaining provision for depreciation or accumulated depreciation account. Okay, the basic accounting treatment. So let's just pass the journal entries, the first requirement. So let's see what happened in the beginning. See, in the beginning, this Rishi purchased a machinery for 10 lakh. So this is purchase of an asset. What's the journal entry for purchase of an asset? Really simple. You all know, whenever asset increases, we have to debit that, right? So here machinery is increasing. So see here, 2019, 1st October, machinery account debit 10 lakh, right? And then Here nothing else has been said whether it is paid through cash or bank. Let's just assume it is paid through bank. The money has been paid through bank, so to bank account 10 lakh. You can also take cash, it doesn't matter, but of course such a huge amount is mostly paid through bank, right? So it's common sense. Fine. Machinery account debit to bank. One asset is increasing, you have debited that asset, machinery, and bank balance is decreasing, so you have credited the bank account. Okay, one asset is increasing, you debited that, and the another asset is decreasing, you have credited that. Clear? Easy. And then the depreciation has to be charged 10% as said by the question according to SLM, right? Accounts are closed every year on 31st March. So when do you charge the depreciation? You charge the depreciation at the end of the year, and this is the end of the year, 31st March. Now understand properly. You purchased the machinery, this Rishi purchased the machinery on 2019 1st October, right? So from 1st October till next 31st March, how many months are there? Understand, October, November, December, January, February, March, 6 months. 6 months, isn't it? So in this case, you have to charge proportionate depreciation. You cannot charge the depreciation for the entire 12 months because the asset was available to use only from 1st October, not from 1st April, not from beginning of the year. No. So from 1st October till 31st March, for this period, you will charge the depreciation. Is that clear? So how will you calculate this? It's really simple. As I told you, it's 6 months. So you will just proportionate it. See, understand. 1 million is the cost of the asset, right? 10 lakhs. 10 lakhs into 0.10, that's the depreciation percentage, the rate, into 6 divided by 12. 6 months now, 6 divided by 12, that's equal to 50,000. So 50,000 is the depreciation that you have to charge. Now, how do you charge the depreciation? How do you record the depreciation in this basic, accounting treatment? You all know what do we do is we debit the depreciation account because it's an expense. To record the expense, what do we do? To record the expense, to increase the expense, we debit them, right? So depreciation account debit, okay, 50,000, and then asset account needs to be credited because in this basic accounting treatment, we directly reduce the asset value. In this basic accounting treatment, we directly reduce the asset value. Fine. So asset is being reduced. You all know now depreciation is also reduction in the value of asset. So that's what is happening over here. Asset is being reduced by crediting it. Fine. So now see the actual journal entry over here. Depreciation account debit 50,000 to machinery account 50,000. 10 lakh into 10% into 6 by 12. Clear? Easy. And then what you have to do, I have told you that, what do we do with all income and expense account? We close them at the end of the year. We always close them at the end of the year to calculate profit or loss, the financial performance of the business. In profit and loss account, we take all the expenses on the debit side of profit and loss and all the incomes on the credit side of profit and loss. That is what we do. So to do that, what we have to do, we have to give the effect of all the expense and incomes to profit and loss and just close, completely kill all the expense and incomes account. So to do that, what you have to do, how do you kill in accounting? How do you cancel in accounting? It's really simple. Understand. If you want to cancel something in accounting, you cannot just, cross or just, cut or something. No, you cannot do that. What you have to do is you have to play with debits and credits. See, depreciation account was debited over here to record, to increase. Isn't it? Depreciation was an expense. To increase, you had debited it. Now you have to kill it, you have to cancel it, you have to decrease it. So you will have to credit that. See here, what will happen? Here depreciation was debited. So you will make an equal credit over here. Depreciation to depreciation account 50,000, and then the debit would be profit and loss. So with this entry, you have closed off the depreciation account. Whatever balance 50,000 was there in depreciation, that has flown. The effect has gone into profit and loss account. Is that clear? That's the logic of this. You understood the complete logic of these two entries? You recorded the depreciation, reduced the value of asset, and then close the depreciation account through profit and loss. Clear? Simple and straightforward. Now what will you do? Now see here, the question is asking you the data, the journal entries, everything for 2021 also and 2022 also. So you have to go to the next year now. So in the next year, what will happen? See here, it's really simple. The same thing you have to do. 2021, 31st March, you have to look back. On 31st March, you have to look back. How many asset do I have? How many PPE or tangible fixed asset do I have? Oh, we have only one. And the original cost is 10 lakh. We are following SLM method over here, right? So now, how long do we have that asset for, that PPE for? Oh, we have that for complete 12 months, isn't it? From 31st March 2020 till 31st March 2021 for complete 12 months. So we will charge the complete 12-month depreciation. So let's calculate that complete 12 months depreciation. It's really simple. 1 million, the cost of the asset, yeah, 10 lakhs into 0.10, yeah, the rate is of 12 months now. So if you multiply this, 1 lakh is the depreciation for the entire year for complete 12 months. 1 lakh is the depreciation. So you will just record that. The same logic, the same these two entries you will pass. Okay, no difference at all. So here, depreciation account debit 1 lakh, recorded the expense. To machinery account, you have reduced the value of machinery by 1 lakh, and then on the same day you have closed off the depreciation account by transferring it into profit and loss account debit to depreciation. The same entry, clear? The same logic. I don't need to explain to you once again what does that mean, right? Okay, and then you will come to 2022 as asked in the question, yeah, 2022 also. So in 2022 what will happen? 31st March, the same entry, the same this procedure also. You will look back, how many machines do I have, how many PPE do I have, okay, for how long do I have them, right? What is the method, what is the rate to apply on them, and you will just apply, right? So the same calculation will happen, yeah, now in SLM what happens? In SLM every year constant depreciation is there, the same depreciation will be there, isn't it? I've told you in the conceptual video, in the second conceptual video of straight line method, that depreciation is same every year, right? An equal amount is written off every year, isn't it? So that is why, see here, in 2021 also it's 1 lakh, in 2022 also it's 1 lakh. Okay, so that's the thing. Depreciation account debit 1 lakh, to machinery account 1 lakh, and then you will close out the depreciation by making an equal credit, and the debit would be profit and loss, right? So the same entries will be passed, and this is how you are done with this journal entries for this first case. Fine. Now let's see the ledger accounts. How will you prepare the ledger account for this case? Now see here, we have the ledger account. Let's understand how to do this, and more importantly you have to understand this without seeing the journal entries. Okay, right. So first let's prepare this machinery account. Now machinery account is an asset account. It has debit balance. What does that mean? It has debit balance. It means that whenever this account will increase in the value, you have to debit. Whenever this account will decrease in the value, you have to credit. Is that clear? And debit balance also means that opening balance will be on the debit side and closing balance will be on the credit side. Okay, this is the case with all the debit balance accounts. Fine. Okay, right. So let's begin. First, what happened in this in this business here in this question? In this question, first this Rishi guy purchased a machinery for 10 lakh, for 1 million, right? So let's just do the posting of that. So in that transaction, what happened? Machinery came into the business, right? Machinery value increased in the books of account, isn't it? So machinery is increasing because of what? It is increasing because Rishi paid money to get that machinery through bank. So to bank 10 lakh. Is that clear? Machinery is increasing because of bank. Fine. So this is how you have to do the posting. Start from the middle. Machinery is increasing because of bank. This happened on 1st October 2019. Simple and straightforward. 10 lakh is the value, right? And then what happened? And then we had to charge the depreciation. The year end came, right? The year end was 31st March, isn't it? 31st March. So on 31st March, we did the calculation. I showed you just the calculation also. The calculation was 50,000. The depreciation 50,000. 10 lakh into 10% into 6 by 12. That was the depreciation. But now how will you do the posting? It's really simple. Because of depreciation, what happens? Because of depreciation, there is a reduction in the value of an asset. Isn't it? There is a reduction now. Yes, there is a reduction. Yeah. See here, let me just show you that treatment, the basic accounting treatment. Yeah, the journal entry only actually, just to give you the understanding. Depreciation account debit and asset account was credited. Here, what is happening? Why asset account is getting credited? Because it is decreasing. It is decreasing. Okay. So that's the thing. So machinery value is being decreased by how much? By 50,000 because of depreciation. Machinery value is decreasing because of depreciation, and the amount is 50,000, and this happened on March 31st. Is that clear? Right. Now the year has ended, right? March 31st. So still there is a balance, isn't it? See here there is 10 lakh and here there is 50,000. So there is a gap of 9,50,000, and this gap will be filled by the closing balance. There is a gap now. You have to balance the ledger accounts. Here there is 10 lakh, here there is 50,000. So there is a gap of 9,50,000. This gap has to be filled by by balance C by D, by balance carried down. Okay, March 31st. This will happen at the year end only. So 10 lakh on both the side, 10 lakh minus 50,000, that's equal to 9 lakh 50,000. Now you have to know the interpretation. See, understand, 10 lakh is the original cost of the machinery, yeah, the amount you purchased, and then this much depreciation you charge, and this 9 lakh 50,000 is the carrying value, carrying amount, book value, or written down value. Okay, is that clear? Right. Now this closing balance will become the opening balance on this side, to balance B by D, to balance brought down. This will happen on the first day of the year, 1st April 2020, isn't it? Here the year which is going on from 1st April till 31st March. So it may look a little bit odd to you. See here 2019 to 20. You have to understand this is the same year, isn't it? See, this year started from when? 1st April 2019 and it ended on 31st March 2020. Okay, it's the same year only, same financial year. Yes, you understood that, right? Okay. So this is the first date, to balance brought down. 9 lakh 50 will come over here, and then you have to charge the depreciation. You did now in the general entry, you charge the depreciation in 2021 also, isn't it? Remember? Yes. So what's happening over there? The same thing. Machinery value is being decreasing because of depreciation. How much? Is it 50,000? No, 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 no. In 2021 March 31st till here we had the machine for complete 12 months. So the entire year depreciation you have to take, that's 1 lakh. 10 lakh into 10%. Is that clear? Yes. And then now here again you will have the gap. Yeah, how much gap you will have? 8 lakh 50, isn't it? See, 9 lakh 50, you have to balance the account. 9 lakh 50, write it on the both the sides. 9 lakh 50, 9 lakh 50, 9 lakh 50 minus 1 lakh, that's equal to 8 lakh 50. 8 lakh 50 is the gap, and that gap has to be filled by the closing balance. By balance carried down, C by D, okay, at the year end. And then in the next year what happened? In the next year again, this will become the opening balance, 2021 1st April, right? This is the first date of the next year. To balance B by D, 8 lakh 50. And then again what will happen? The year end will come, and in the year end again you will have to charge the depreciation. The same logic, okay, what I explained to you in the journal entries. Now you have to look back, how many machine do I have, for how long do I have them, right? What is the rate of depreciation, which method we are following, okay? So that's how you have to charge the depreciation, right? I've already explained that to you in the journal entries, so that is why I'm not explaining that over here again, right? So March 31st by depreciation 1 lakh, machinery value is decreasing because of depreciation, 1 lakh. Clear? Easy. And then again the gap will be filled by the closing balance, 7 lakh 50. How is that? 8 lakh 50 is the bigger amount, write it on both the side. 8 lakh 50 minus 1 lakh, that's equal to 7 lakh 50,000. This is the closing balance, written down value, carrying value, book value. Okay, so many different names are there. Then at the last, what you have to do, the question asked you the data, yeah, the ledger account for only 3 years, right? 2020, 2021, 2022. Still what you have to do, always remember, you have to open the balance and leave it like this. Okay, from here you have to bring the balance over here. By balance carried down now 750. This you have to bring over here and leave it like this whenever you will end the machinery account. Clear? Easy. Understood now? Right. Now let's move on to the depreciation account. Okay, so see here, depreciation account. Depreciation account is really simple. I have explained this properly in the previous video also. What you have to do, there is a shortcut for depreciation account. You just have to see in the machinery account, in what places there is depreciation. 3 times depreciation has come. 50,000, 1 lakh, 1 lakh. So just do the cross postings over here. March 31st, 2020, machinery 50,000. March 31st, 2021, machinery 1 lakh. March 31st, 2022, machinery 1 lakh. Okay, the cross posting from over here you can do. Fine. And then now what do we do with the expense account at the end of each year? At the end of each year, all the expense and incomes account are closed through profit and loss, right? So that's why here profit and loss account will come. 50,000, 1 lakh, 1 lakh. Okay. And here you don't need to balance and all, because nothing is there. Whatever amount you have taken over here, the same amount you have to take over here. So directly double underline it. It's over. Don't need to balance and all. There is no balance, nothing. Fine. Simple, right? Depreciation account is really simple. If you want to understand the logic, let's understand the logic. It's really simple. Depreciation is an expense account. It has debit balance. Debit means plus, credit means minus. Opening balance on the debit side, closing balance on the credit side. That is the rule, but there will not be any balances over here. Fine. So now what's happening over here? Logically what's happening? Depreciation is increasing Because you have charged depreciation on the machinery. Okay, depreciation is increasing because of the machinery. Depreciation is increasing because of the machinery. Depreciation is increasing because of the machinery, isn't it? At first, what did you do? At first, you were just recording the depreciation, isn't it? You were debiting the depreciation, recorded the depreciation, yeah, recorded the depreciation, recorded the depreciation, and then what did you do? You cancelled off the depreciation by making a credit. Yeah, you see, right? So that's the thing. First you record them and then you cancel them. So for cancellation, see here, for cancellation, depreciation is getting credited because of profit and loss. Depreciation is getting credited because of profit and loss. Depreciation is getting credited because of profit and loss. Yeah, that's the logic. Here first you recorded. Yeah, you were charging the depreciation and then you were cancelling the depreciation and the amount was going to profit and loss. That's the logic. Clear? Easy and straightforward, right? Fine. Now let's see the balance sheet. Now see, balance sheet is also very simple here. What's happening in the balance sheet? Now in some countries, what's there, assets will be there on this side and liabilities on this side. Okay, that doesn't matter here. In India, it's like this only, liabilities on this left side and assets on the right side. Fine. Okay, so as on 31st March 2020, okay, at the end of our first year, okay, what happened? Machinery value was 10 lakh. Yeah, machinery value was 10 lakh. And then the depreciation that you charged on 2020 was how much? 50,000, right? So minus 50,000, that's equal to 9,50,000. 9,50,000 is the carrying value, right? You see this closing balance, 9,50,000. Yes. Then in the second year, what happened? Yeah, in 2021, as on 31st March 2021, machinery 9,50,000. You see, you have to take this value, the carrying value or the written down value or the book value. Okay, not again 10 lakh. No, 10 lakh is not there now, because you are reducing the value of machinery. See here, what's happening? You have reduced now. Every time you are reducing by depreciation, yeah, machinery is being reduced by depreciation. So that is why every time machinery value will be reduced in the books. Machinery 9,50,000. Okay, 9,50,000 minus depreciation you have charged, that's 1 lakh. Okay, that's equal to 8,50,000 carrying value, book value. And as on 31st March 2022, machinery value is 8,50,000. Yeah, this 8,50,000, and then from this you have to reduce the depreciation that you have charged in this year, 1 lakh. Straight line method, now every year the same depreciation will be charged until and unless you have purchased or sold the machinery in between or something like that. Okay, so 8,50,000 minus 1 lakh, that's equal to 7,50,000. So this 7,50,000 is the written down value, book value, or the carrying value. Is that clear? So you understood now? Here in this basic accounting treatment, what's happening? In machinery account, we are decreasing. Yeah, we are giving the effect of depreciation and decreasing the machinery account. Okay, we are decreasing the machinery account all the time. Okay, so this is the thing. Now let's just see the second accounting treatment. Here we have completed the first accounting treatment. We saw the journal entries, the ledger account, as well as the balance sheet, and I explained to you properly how to prepare these accounts without seeing the journal entries at all. Yeah, I didn't show you the journal entries. Directly we understood how to do this machinery account, how to do this depreciation account, and the balance sheet also, right? So let's move on to the second accounting treatment, the more sophisticated one, where we maintain accumulated depreciation account or provision for depreciation account, right? Let's go there. Now see, here we have the solution for the case 2, when provision for depreciation or accumulated depreciation account is maintained. But before going into the solution, let's just understand the concept of this first. The concept is really simple. Understand, this provision for depreciation account or accumulated depreciation account is nothing but just a contra asset account. Now you will wonder, what is this contra asset account? See, it's really simple. You all know what an asset is, what an asset account is. Asset account has debit balance. Debit means plus, credit means minus, isn't it? Yes. This contra asset is exactly opposite to that. That's all it is, exactly opposite to that. Okay, contra asset will have credit balance. Credit means plus, debit means minus, exactly opposite. And see here, it offsets or act against the related asset account. For example, let's just say you have a machinery of 100 and you have a contra asset, let's say accumulated depreciation of 20. Accumulated depreciation with value 20, and here you have a machinery with value 100. So now what will happen? This accumulated depreciation will kill the 20 in that. So the asset will become 80. Asset will become 80. From 100 it will become 80. This is what will happen. Contra asset account offsets, it kills or act against the related asset account. Always this contra asset is associated with some account. Okay, right. So that's the thing. It is shown as a deduction from the assets value in balance sheet. Okay, we'll practically see this, don't worry. So what will happen, see, the asset value will be there. Let's just say, for example, 100, accumulated depreciation 20, for example. So the outer column, the value will come how much? 80, and that would be the carrying value, carrying amount, return on value, book value, whatever it is. Fine. Now what's the general meaning of accumulated depreciation or provision for depreciation? See, it's really simple. It is the total amount of depreciation charged on a particular asset from beginning to the current period. So what will happen basically is, understand, every year, let's just say depreciation is charged. Okay, 10,000, 10,000, 10,000. Okay, for 5 years, 10,000, 10,000 depreciation has been charged. 10,000 has been going to profit and loss as a depreciation, 10,000, 10,000, 10,000. So in the same manner, what will happen, that 10,000 amount will also go into a separate account, contra asset account, called as accumulated depreciation. 10,000, 10,000, 10,000, 10,000 will go in this account also. Okay, so in the 5th year, if you'll go and see in accumulated depreciation account, you will find 50k balance is there, 50,000 amount is there in accumulated depreciation account. Okay, that's what will happen. And that 50,000, if you see in the balance sheet, what will happen, let's just say asset is 100,000, asset is 100,000, 1 lakh, and accumulated depreciation will be there 50,000, and the outer column also there will be 50,000. Yeah, the remaining 1 lakh minus 50,000, that's equal to 50,000. Yeah, so that's the meaning. It is the total amount of depreciation charged in the 5th year. How much depreciation you have charged? 10, 10, 10, 10, right? 50,000 depreciation you have charged on a particular asset from beginning to the current period. Okay, from beginning to the current period. Is that clear? That's the thing. Now let's just get into the solution. Let's understand this practically. Okay, conceptually you will not get this 100%. Let's just see this practically. Now see here, first let's just understand how to pass the journal entries. It's really simple. At first what happened, the same thing. First you purchase the machinery, no difference at all. Machinery account debit to bank, 10 lakh, 10 lakh. The same journal entry which you pass in the case 1, the same journal entry you have to pass. No difference at all. Yeah, in the case 1 you pass this entry, 2019 October, machinery account to bank, 10 lakh, 10 lakh. Yeah, yes. And then you had to charge the depreciation. Now here also the calculation and everything will be same, because the method of depreciation is same, calculation is same, 10 lakh into 10% into 6 by 12. Yeah, the same calculation. This is the case 1, 50,000, 50,000. But here what did you do? In this case 1 you credited the machinery account. Here in the case 2, in the second accounting treatment, you will not take the machinery account. What will you do instead is you will replace machinery with accumulated depreciation account. I have written the short form of depreciation over here. Okay, so see here, depreciation account debit, you have recorded an expense and you did not reduce the machinery value. No, you have just credited the accumulated depreciation account 50,000. So in this entry, what's happening, expense has been recorded and you have created this dummy contra asset account, and credited it with the amount of 50,000. Is that clear? You have not touched the machinery account. Okay, this is what will you do when you have maintained the provision for depreciation or accumulated depreciation account. Okay, two different names are there for this. So see here, depreciation account debit to provision for depreciation or accumulated depreciation. If you want provision, you can write provision. If you want accumulated depreciation, you can write accumulated depreciation. Okay, there is no hard and fast rule. Fine. Okay, and then the second entry is same only in the basic accounting treatment also, and here also the second entry is same, that is transferring the expense to profit and loss account. How that will happen? See, profit and loss account debit to depreciation. The same logic what I explained earlier now, the same logic. Okay, depreciation is cancelled by making an equal credit and the debit is profit and loss. Now this thing you will repeat in the 2021 also, no difference at all. Depreciation account debit to accumulated depreciation account, 1 lakh, 1 lakh. Okay, and the second entry is same, depreciation will go to profit and loss. You will close the depreciation account. And then in 2022 also the same thing will happen. In here also, see, 31st March, depreciation account debit 1 lakh to accumulated depreciation 1 lakh, right? So you have recorded the expense and you have credited the accumulated depreciation account by 1 lakh. Now understand this properly. I told you accumulated depreciation is opposite to asset. Asset has debit balance. So accumulated depreciation, a contra asset will have which balance? It will have a credit balance. It's not liability. It's not liability, it's a contra asset against the asset, so it will have a credit balance. So that is why it is being credited over here. You're creating a provision, or you can say you're creating a accumulated depreciation, a contra asset. People think we are writing off something over here. No, that's not what we are doing. We are just creating over here. Here also accumulated depreciation has been created. It's increasing. Here also it's increasing. Here also it's increasing. Is that clear? You understood these entries? Really simple now. Just replace the machinery with accumulated depreciation. Okay, you will understand the entire concept. Don't worry, I will explain to you. Okay, you understood the journal entries now? Fine. Now see the machinery account, machinery ledger account. What's happening in machinery ledger account? It's really simple. Nothing is happening in machinery account. See, it has debit balance. Debit means plus, credit means minus. Opening balance on the debit side, closing balance on the credit side, right? So first what happened? First you purchase the machinery. Machinery is increasing because you have purchased it through bank. So to bank 10 lakh, right? This happened on 1st October 2019. And then did you charge the depreciation through machinery account? No, you did not take machinery account at all, right? You have not touched the machinery account in depreciation entries. No, right? So here depreciation will not come. Okay, this will be clean. This account will be very clean. That's the purpose actually why we are using this accumulated depreciation. And also one more reason is there that I will explain to you. It looks really clean now. There is no depreciation, nothing. See, to bank 10 lakh, and then there will be gap over here. There is no other transaction now, so there is a gap over here. You have not sold the machinery or something, so there is a gap over here. That gap has to be filled by the closing balance, by balance carried down 10 lakh. So 10 lakh, you don't need to do that balancing and all, right? Directly you can just underline. Yeah, don't need total columns and all. Directly this is the total only. Just double underline it and over. So now this closing balance will be the opening balance over here. To balance B by D, 10 lakh. Yeah, 1st April 2020, isn't it? And then again the year end will come 31st March 2021. Here again the closing balance, yeah, opening balance, and then here there is nothing, gap again, so that will be the closing balance, 10 lakh. Nothing is happening in the account. Opening balance, closing balance, that's all you're doing over here. By balance carried down 10 lakh, and then this closing balance in the next year will be opening balance, to balance B by D, and then here there is nothing, no transaction, so again this gap has to be filled by closing balance, by balance carried down 10 lakh. Okay, and then as I have told you earlier also that at the end what you have to do, even though the question has not asked, still what you have to do, you have to carry forward this balance over here and leave it like this. Okay, for the next year 2022 1st April to balance B by D 10 lakh. Clear? Simple and straightforward, right? So in machinery account nothing is happening, it's very clean. That's the one purpose of preparing this doing this accounting treatment, maintaining accumulated depreciation account. Fine. Now let's see two more ledger account that we have to prepare over here: accumulated depreciation and depreciation account. Now see, here we have the accumulated depreciation account, which is also known as the provision for depreciation account. You all know now this is a contra asset account. It has credit balance. Credit means plus, debit means minus. Okay, it's opposite to machinery account. It's opposite to the depreciation account also. Fine, because it has credit balance. Fine. So now how do we begin over here? It's really simple. What happened in the journal entries? Do you remember? What did we do in journal entries? In journal entries, in the first entry itself, I will not show you the solution journal entries. No, I will show you the format. See, in the format, see what's happening here in this first entry. When you're recording the depreciation, you're recording an expense. Expense is increasing, depreciation account debit. Okay, fine. And then what's happening? You are creating this accumulated depreciation account. Yeah, it was not there before. This provision also, you are creating it. You can call it provision or accumulated depreciation. Okay, this contra asset you are creating over here. If you're creating means, understand in the ledger account how it will be. In the ledger account, you're creating means accumulated depreciation is increasing. Accumulated depreciation is getting credited. It's increasing because of what? Why is it increasing? Why is it increasing? It's increasing because of depreciation. 31st March, by depreciation 50,000, isn't it? 2020 31st March, that's the first date when you charge the depreciation, right? So by depreciation 50,000. Do you understand the logic? You created this. It was not there from previously. Fine. Okay, so you created this, and then there is nothing on the debit side, so you have to close that with a closing balance. Fine. So 50,000 on the both the sides, and to balance carried down 50,000. Clear? Simple. This is at the end of the year 2020, 31st March. Okay, this closing balance will become opening balance. Now understand, this is not income and expense account. This will not get closed. This account will not get closed through profit and loss or something like that. No, it will exist till the asset is disposed of. Okay, we'll discuss the asset disposal in the separate video. Okay, when the asset is sold or scrapped. Okay, that's what it means. Now see, accumulated depreciation, closing balance, you understand 50,000. This 50,000 will stay in the account. It's not over. This 50,000, even though it will go into the balance sheet, but still it will exist. Remember this, whatever goes into the balance sheet, it exists. Always remember this line, whatever goes into profit and loss, it is finished. Okay, right. So now see here, accumulated depreciation, now closing balance will become opening balance over here on 1st April 2020. Okay, 50,000. And then again in 2020, what did you do? You again charge the depreciation. And while charging the depreciation, did you credit the asset account? Did you credit the machinery account over here? No. You credited the accumulated depreciation account. So again in 2021, 31st March, what happened? 1 lakh value was credited over here. Accumulated depreciation was increased by 1 lakh, isn't it? So accumulated depreciation account is increasing by how much? By the depreciation amount, that is 1 lakh. Yeah, because of depreciation. Yeah, this account is increasing because of depreciation. 31st March 2021, 1 lakh. Easy, simple. And then here there is a gap, right? So 50,000 plus 1 lakh, that's equal to 1 lakh 50. This is the bigger side. So 1 lakh 50, 1 lakh 50 on both the sides. And then there is nothing over here. So that will be the closing balance. To balance carried down 1 lakh 50. Yeah, 1 lakh 50, right? So this is the closing balance on 31st March 2021. Now this will become the opening balance in the next year. See here, buy balance brought down, B by D, 1 lakh 50, right? And then you see 2022, again what's happening? 31st March, the value in this accumulated depreciation account is increasing. This account is getting credited because of depreciation, 1 lakh, right? So this is how you have to do. And then see, 1 lakh 50 plus 1 lakh, that's equal to 2 lakh 50. Okay, 2 lakh 50 on both the sides. Here there is nothing, there is 0. So that entire gap will be filled up by the closing balance, to balance carried down. 2022, 31st March. Clear? Easy. And then at the end, what did I tell you? Always you have to, leave it. If there is a balancing figure like this, then you have to open and leave it. Okay, open the account and leave it. 2022, 1st April, buy balance B by D, 2 lakh 50,000. Clear? Simple and straightforward. You understood now? Accumulated depreciation, it has credit balance. It's always increasing. Fine? Because of depreciation. And then you have to properly balance it. Fine? Okay. And then see here, depreciation account, you already know how to prepare the depreciation account. There is no difference at all actually. It's same only. It's just that here machinery used to come in that first accounting treatment, isn't it? Let me just show you ledger account of that first accounting treatment. See this first account without this accumulated depreciation. What used to happen in depreciation account? Machinery used to come. Here profit and loss only. Here also profit and loss only. But here accumulated depreciation will come. Okay, depreciation is increasing. Yeah, that's what is happening. You're recording the depreciation first. It is increasing because of accumulated depreciation, 50, 1 lakh, 1 lakh. And then the same logic, you are transferring the balances to profit and loss account. Yeah, whatever value you have in depreciation account, that is going to profit and loss. 50, 1 lakh, 1 lakh. Clear? Easy. You can just do the cross posting. Okay, shortcut is just 50,000 is there. Okay, 50,000. 1 lakh, this is in accumulated depreciation now. So 1 lakh, cross posting. This is called as cross posting. Okay, 1 lakh, 1 lakh. Fine. This is how you will easily do it. So depreciation account is over. Okay, so here what was the difference? Just replace machinery with accumulated depreciation. Now, instead of writing accumulated depreciation, what you can also write? You can also write provision for depreciation. If you write provision for depreciation over here, here also provision for depreciation. Okay, it has to be uniform. Otherwise, you will lose the marks. Now see here, balance sheet. Now there is a big difference in the balance sheet also. Main difference is in the balance sheet only. In balance sheet, what's happening? As on 31st March 2020, what was the machinery's value in the beginning? Machinery we purchased for 10 lakh, right? Isn't it? Machinery we purchased for 10 lakh now. Or did you forget the question? I didn't show you the question. See, 10 lakh. Yeah. So machinery value was 10 lakh, and then in the in the first year in 2020, 6 months was passed, so we charge a depreciation of how much? Only 50,000. So see, minus 50,000 accumulated depreciation. You will not write depreciation, no, you have to write the whole thing, accumulated depreciation or provision for depreciation in this second accounting treatment. Okay, see here, with provision, okay, or accumulated depreciation. So 10 lakh minus 50,000, that's equal to 9 lakh 50,000. Fine, okay. And then as on 31st March 2021, next year, what will happen? Machinery will again be at original cost only. Machinery's value will not change. Unlike in the first accounting treatment, what happened in the balance sheet? If you remember, in the balance sheet, if you remember, it was always decreasing. See here, 10 lakh minus 50, 9 lakh 50. Then again here 9 lakh 50 used to come. 9 lakh 50 minus 1 lakh, 8 lakh 50. 8 lakh 50 minus 1 lakh, 7 lakh 50. But here it's not like that. Here it will stay the same. 10 lakh, 10 lakh, 10 lakh. The original cost will stay the same. Okay, there is a benefit of this actually. Now see here, accumulated depreciation 50,000, that's 9 lakh 50. Now here machinery 10 lakh, accumulated depreciation 1 lakh 50. You see, accumulated depreciation will keep on increasing. So ultimately the effect will be same. 9 lakh 50, 8 lakh 50, 7 lakh 50, isn't it? Here also if you see 9 lakh 50, 8 lakh 50, 7 lakh 50, the effect is same only ultimately. But the presentation, see, understand, let's just say you have a balance sheet of 31st March 2022. Okay, so you will not have all that data. You will just see this balance sheet. What can you come to know? Okay, you can come to know here what is the book value of the machinery, 7 lakh 50. What is the depreciation that is charged in the current year on this machinery, 1 lakh. Okay, that's all you get to know. Only these two things. Okay, only these two things. This 8 lakh 50 is not cost of the machinery. No, this is the book value of the previous year, isn't it? Yeah, but here if you see in this sophisticated accounting treatment, in this second accounting treatment, if you are in this year directly, if you have balance sheet of this year 31st March 2022, then see, just by looking at over here how much total depreciation has been charged up till now. 2 lakh 50 depreciation has been charged up till now, isn't it? I told you now what is accumulated depreciation. It is the total amount of depreciation charged on a particular asset from beginning to the current period. Why is that so? Because depreciation is getting accumulated in this contra asset account, right? This account doesn't get finished just like that. It always exists until and unless asset is disposed of. Okay, so what's the benefit? See the benefit, you can get to know what is the total depreciation that is charged, right? 2 lakh 50 total depreciation has been charged up till now, and you get to know what is the carrying value, book value, written down value, currently, and then you can get to know also the original cost of the asset. This asset was purchased for this cost, 10 lakh. This is the original cost. Even if 9 years has passed by, still machinery will be shown 10 lakh. But accumulated depreciation will keep on increasing. Okay, so that entire picture is communicated via balance sheet if you follow this method. Which method is this? This is the second, second presentation, way of treating the depreciation. Second way of treating the depreciation, by maintaining provision for depreciation or accumulated depreciation account. Okay, so you understood? What will happen? The same thing will happen in both the treatment. The same effect will go in P&L, and then same carrying value will come outside. Just the presentation will be different over here. And one more benefit is there. This one more benefit is that the machinery account will look very clean and neat. Yeah, if you look in the machinery account of that first accounting treatment, and what happened over there, see here, it looks a little bit messy because depreciation is coming here, all the depreciation is coming. Yeah, it looks a little bit messy. Right now we have only one machine, but there will be lots and lots of components and all in this machinery itself, then it may look a little bit complicated. So that is why, to keep it clean and simple, we can have a separate accumulated depreciation account. That's the another reason. Fine, right? And this presentation, this is the most important, right? You understood now what is the difference and all. It's really simple. Okay, I will upload the notes on the Telegram channel so you can properly compare if you want. Now in this video here it's not possible. Okay, so you understood now how it is done, right? Simple and straightforward. Okay, so that's it for this video. Okay, see you in the next video. Bye.